I want to go over a little bit on double leverage funds, and they're available from ProShares, and they could be really good. Let me put it this way: there's a good side to them and a bad side. Obviously, people know that with double leverage, the percentage moves up twice or moves down twice, but that's on a daily basis. Daily. It doesn't mean if the percentage of silver or oil or whatever it is went up 10% in 2 months, you're not going from that date 2 months ago to the date 2 months later and calculating a percentage move up, and you're going to get that much times 2. No, it works on a daily basis. And I'm not saying it's a bad fund, but I think you might find some people say they're more for the sophisticated investor or whatever you want to call it. But let me put it this way: it does erode, and I'm going to explain a little bit about that. The more volatility, the more the fund erodes. And maybe I'm going to make this clear as mud. But say, for instance, this is a silver spot price, 33.50, and say AGQ was running at 60. I think that's when I got a little bit of it. Now, if this thing goes up next week 5%, say silver goes up 5% next week, I'm going to dump it. I'm going to dump this fund. So immediately it's gone, And I don't know if it is or not, but I might have to hold off longer. I don't expect it to drop through the floor, some people say. But I also want to point out, if you're buying physical silver, which I mainly did, on dips and all that type of stuff, you're still playing the markets. I don't care what you think, because you're outside of the system or whatever, you're playing the markets. You're looking to get some kind of currency or whatever that's used as legal tender to transfer, to exchange goods for. You're looking to get that type of money, whatever exists. Some people are saying the money system's going to collapse and all this type of stuff. Well, if it does, I think you're going to need a lot more than silver to survive that. But you are making a speculative bet. I think it's a great speculative bet, and I understand fully, despite what you might think, about the inherent value of silver, the industrial demand, and then it's not just paper. And I know there's a lot of paper scams going on out there, but still, if you're buying physical silver on dips, you're looking to sell at one point in time, and maybe you don't want to hold fiat money or whatever there is at that time, or a commodity-based currency, but you're going to exchange it for something else. You're going to exchange it for real estate, because I think real estate's about the bottom now for real. 2012 is probably about the bottom for real estate. So, realistically speaking, as people are getting a hell of a lot more money on silver and gold, and say gold goes up to $8,000 an ounce or some crazy thing, and silver goes to $400, I think that might be something more like in line with what's going to happen, and that's a very, very big jump. I don't know what it's going to go to. But you know what? If the real estate is really low, you could jump back into that, and then you got something that actually produces income versus something you sit on that's going to go up, that can go down. And you noticed every time with the silver curve, it's like a slow, steady, bumpy ride up with a hard crash, with a cliff. That's why I say you don't want to be on the other side. You don't want to be on a cliff. If it was a nice, slow, steady ride up and a nice, slow, steady ride down, I wouldn't care. But when it's taking a ride right off the edge of a cliff, you don't want to be on that side. So sometimes you can tell if you're getting 2 or 3 times as much money, it went up that much. I think you'd be stupid not to sell part of it. That's just common sense. I'm not guessing. That's common sense. It can go up double and triple, but I'm not saying to dump the whole thing. Because I'm overly bullish on silver. I admit that. But I'm not as bullish as some of these people are, and I'm not really sure what their game is. And that's what I'm trying to warn people about, because some of the people out there are telling you thousands of dollars an ounce for silver in real dollars. They don't understand silver. They don't understand a lot of things. Believe me. Inflationary dollars, it may happen. And that might be a good reason to always hold back on some silver, always, because you really don't know. You know, if I knew every single fact, I would have to just play the cards myself, bet 100% that way, and grab the gains. But to get on with this AGQ, for instance, and this, they have power shears for all kinds of stuff. I think they're pretty good. I played them against the dollar index. It worked, that it would go down. You know, when the euro was like 120 to the dollar and the dollar index was 90. I bet against the dollar. It worked. You know, I used this AGQ one time really hard. Got well over 200%. It worked. You know, even the one I did this year off the advice of Lindsey Williams, I went in there low enough that I broke even versus getting killed, and I'll never listen to that guy again. Believe me, I'm listening to me. And I think a lot of people got clobbered buying options listening to that guy. And I'm not saying he was being dishonest, but somebody was. Somebody was who was telling me the information. But this fund will erode upon volatility. Say, for instance, this is running about a week. I don't know, it's just 6 trading days. You're going from 34 to 33 to 33.25, and you wind up at $35 right here, right? You're at, let's say, $35, right? Well, you got a gain of 4.48%. Now, if you said what's the percentage times 2, that's 8.96%. And as I was stating before, but with AGQ, you actually ran up 8.9% as you're running these numbers, because it's running twice the amount the silver price moved percentage-wise on a daily basis, and that's the key. Now, if we go down and we bring this all the way down, say we go about 126 trading days, I don't know, what is that, half a year, something like that, right? If the same movement, you had the same movement, you went from 33 to 50, 33.50 to $35, you had a 4.48% increase in the price of silver. AGQ only went up 5.25%, 5.25% in this example. Now, if you change the volatility, like I made this like a hard dive, like $1 down in this one day. If I change this number to like 34.50 or something, you might see this around 8% instead of 5.25%. It erodes faster when the volatility is higher. And you know, one thing like oil and silver, the volatility is up there, you know. So this is why this fund is, it's kind of dangerous, and then yes and no. But for instance, if you jumped in at this year or late 2011 when silver was about $28, and you really knew the direction of silver, say you're looking at the charts, saying, "Ah, that's the low, that's the low," you ought to dump money in this and take your gains. Because you would have had a 20% move in the spot price of silver, you probably would have had about a 38% move or 37% move in AGQ in that period of time. And you take your gains. And if you like physical, we'll buy some physical with it. You know, but the honest fact is, people don't know which way silver is going. And if they do, they're not on YouTube. They're not on YouTube. But I found that many times when I use my own thoughts, I'm usually a little bit better, and I'm more patient. I'm more patient. You know, if I don't expect to see this stuff go up 5% this week in silver, it might go down. You know, I might have to wait 2 months to even get 10%. I don't know. But if it goes up 5% and this thing goes up 10% on this AGQ, guess what? It's gone, and that's exactly how I play it. And I'm going to be doing a lot more of this, because if I see any commodity move an extremely hard move, whether it's copper, palladium, silver, gold, or whatever, and I'm holding that commodity, I'm going to immediately dump a part of it and jump back in the morning, even if it pulls back 3%. It may not, but usually common sense says when you have an extremely hard move in one day, you ought to dump part of your gains, because what you're going to usually see is a slight pullback that next day. And that's usually just common sense. You're not going to be always right, But I do think you can beat the markets. I think you can. And what I'm really saying is, I really think you can beat the other guy. That's what I say. Because most people aren't looking at this stuff. Or if they are, they're not going to act upon it. Now, you know, the big disadvantage of holding physical silver is this. You can't really trade it in and out without taking a major hit. You're buying at a premium over spot, and you're lucky if you get spot when you sell it. Plus, you got to go to the place and deal with the person. You can't just click a button. So, I mean, there's a lot of disadvantages to physical silver, too. But don't think that money, if there's a problem, say, for instance, in financial collapse, don't think that money has to just jump into gold and silver or platinum and palladium. There's a lot of areas you can jump into. And I think one of it's going to be land and agriculture. That's something Jim Rogers says. But, you know, I could see that plain as day. Because he points out that most of the farmers today are like well over 50 years old. And it's like nobody wants to get into farming today. You know, it's like they want to be, I don't know, a yuppie or whatever they want to be. You know, they don't want to get into it because it's work. You know? Now, me, I'm more from the city area, so I really got zero background in farming. So I'm like, you know, I could do hands-on things. But farming is one area I got to stay away from because I don't know nothing about it. But there's going to be a lot of money in farming probably in the future because that's one commodity people can't do without. And so what's going to happen with the money? You know, there's a financial collapse and you got all this cheap land out there. You're going to be buying farmland left and right, producing agriculture. Because that's going to be, you know, even you talked about what happened in Germany in the 20s. When the currency really collapsed, way over 90-something% of people's money was going on food. So tell me what's the one thing you're not going to do without, and tell me if there's a big financial problem. Where's money going to go into? What's cheap right now? Real estate. Real estate. They're going to jump right back in that stuff. That's what I say. And let me put it this way. I'm not exactly a gold or silver bug. I always believe in this gold stuff. And I mean, I'm talking about since the 80s and 90s when the tech bubble was going on and stuff in the 90s. I always believed in this gold stuff. Always did. I always held some back. That's just my strategy. But I think of myself, and I always had advised people like a Geiger counter, you know, and run the numbers all the time in any way. And I don't care about getting focused in on one business, period. You go anyway. That's why I used to like, well, I ain't going to mention the name, but in New York, they're very, very diversified. I like that stuff. You go out in a pattern, and you hit every single area that's going to make money. Any area that hits money. I don't care if it's out of your area or not. You find the money, you turn it over, and then you get rid of it. And I'm not talking about this trading investments. That could be a business. It could be anything. And I don't want to mention any names, but that's usually how to do things. You don't think in a box, you know. You don't think you're just in construction. You don't think you're just in selling fashion or something like that. You go into different areas. You look where the money is, and you concentrate on the money. So I don't like, you know, getting too focused in on this precious metal stuff because a lot of these, I'm telling you right now, I'm telling this as a favor because I really, you know, I don't really make nothing on this thing. What I do is to keep myself tuned up as far as like what my decisions are. That's why I do this YouTube. Period. Right there. You know, it keeps me more focused on what I'm doing. But these guys that are pushing this physical silver, which I think is an extremely good investment right now. I don't think it's a bad investment at all. I think it's a great investment, and it's probably going to go up at least 8 times from where it is right now. Easy. So that's a ridiculously good investment. But they're so focused in on this thing that they're going to make people hold after the crash. And I think there's going to be a lot of curveballs coming up as far as taxation, confiscation, how difficult it is to get money for it, or whatever you got to do. So, and I've noticed that almost all the people out there that are pundits on silver, they really don't know which way it's going, except for Eric Sprott, and he doesn't tell you which way it's going. So, but use a little common sense. If you get some super high gains this year, dump some. And I'm doing that. And I don't think that's because I'm not a silver for bug. It's because I know when it gets extremely high and ahead of gold on the silver to gold ratio, it crashes. And it's not going to go straight up, to $400 an ounce or whatever hell it's going to go up to from here. It's going to have another pullback. So, it's a matter of guessing it right, but I think a little common sense sometimes goes a long, long way. But I just want to point out some more about these double leverage funds. If you got a lot of volatility, and this isn't even a lot of volatility, you see you're holding this about 6 months, and that's assuming it went up. Now, if this went down 4.48%, you would have a loss of more than 9%. So that's the danger of these kind of funds. But they're not as bad as options, because an option, it could be a win or lose all the way. A lot of options go to zero. But they're using derivatives behind the scenes with this stuff, so that's why it costs them money to run this fund. So they got to do this. It's not like they're ripping you off. What do you think? Somebody out there is doing this, all these calculations and trading and stuff for free? I mean, so it isn't a bad fund. I'm not going to knock it, but just beware. It's kind of dangerous. It's not for everybody. You could make some good gains. I mean, if silver went from $34 to $70, I mean, you got double. You might get 3 times on this fund, or 3.2 times. So that's where it really plays. It really works. It works like beauty, right? I like that. I like that. If I knew where silver was going, I'd be using the double leveraged in and out, and I might be doing a little bit more of that because I want to apply my common sense. Well, I call it business sense, common sense, but it seemed to work a lot of times. So when I listen to myself, I usually do pretty damn good. And just want to point out about this fund. It's a two-edged sword, but that's what I mean by it erodes. You're holding it in about a week over here, and if there's hardly any volatility, it won't erode that much, but it can erode even more than this. So you didn't get almost 9%. You got 5.25% because you held it about 6 months. So it's a two-edged sword in different ways, but it's not bad if you always understand what's going on with it. But do beware that don't get silver tunnel vision. I don't like people. That's why I always like working for people that were diversified, and they get tunnel vision in one area of the business, and that's all they've ever been in. I don't like that. It's wherever the money is. Wherever the money is, that's where you go. You build that business, you dump it. That's what you do. And you do the same thing with these kind of funds.